Traders, excited to have you guys in here today. We're going to be talking about this short squeeze of the century. Now, I've been trading 5 years. I have seen nothing like GME. Nothing quite like it. Have seen a few here and there. DRYS, if you guys have been around for that was about 4 years ago, I believe. LPCN, I think, as well, but nothing quite like GME. GME had a short percent interest on its float of 260%. Now, when you have a short percent interest that high, you can only bet it's going to do one thing. The inevitable is going to happen. When everyone is thinking one thing, usually the opposite happens. Of course, everybody thinks GameStop's going to zero. That's why they were shorting it. That's why 260% were shorting it. Everything's going digital. GameStop is pretty much the blockbuster. And essentially, Blockbuster does not exist anymore. That's from the Stone Ages. And GameStop, well, people were thinking, okay, GameStop's going to be the next Blockbuster because everything's going digital. It only made sense. So everybody was short on it. Now, I want to show you guys how you can actually find out for yourselves the short percent interest on a company. What you need to do is go to this free resource, Yahoo Finance, and you can go under statistics here. And down here, you guys see the float, and you also see the short percent of the float. Now, the float are the number of shares available to the public. And the percent of the float that's short here, 260%, ladies and gentlemen. So any kind of buying at all is going to send this thing on up to heaven. Because why? Well, shorts have to cover their position. Let me explain shorting to you guys. For those of you who do not understand, it's going to be really brief. Let's use GameStop as an analogy. Let's say you're borrowing a game from GameStop. Let's say you went and sold them some games. This is irrelevant. You went and sold them 20 games and they gave you a quarter or 50-cent store credit. Forget that. I was just making a joke. Threw that in there for free. Let's say you go to GameStop and you want to borrow a game. Let's say we borrow Halo. We go borrow Halo from GameStop. Now, we may owe them, a little fee for borrowing the game. But let's say we take Halo, we go sell it. We go sell it to someone, we get $20 for it. Well, we still owe GameStop Halo. So we have to give them a Halo copy, right? Well, we find another Halo copy on the secondary market. Let's say we find one on eBay for $10. So we take that Halo, we buy it for $10, we sold one for $20. We return the game Halo to GameStop, and we literally keep the difference between the 20 and the 10. We keep $10. We sold Halo high, and we bought Halo low. That's essentially what it is. GameStop's acting as the broker in this case. But you sell high, you buy low. You buy low, you sell high. That's the idea, right? We don't buy high, hope higher, although that's what a lot of traders are doing. So here's the idea with GameStop. There's a lot of people mad right now. The brokers, there's a lot of manipulation going on with the brokers and restricting you from actually even buying GameStop and some other companies out there. They're also restricting you from shorting it. They're doing like liquidations where you got to auto liquidate by the end of the day. There's so much crazy stuff going on right now. But what we saw was a massive, massive short squeeze. This hedge fund that was heavily short on GameStop, they essentially ended up blowing up. Because why? Shorts are stubborn. Shorts get stubborn. They say, this company is going to zero. I'm not getting rid of this short. This company is going to zero. Well, if you run out of money in your account and you get squeezed to the point of liquidation, then you're done. You blow up. And that's what happened. I've never seen a short squeeze like that. Like I said, it's the squeeze of the century. And there were a lot of sympathy plays to this. But the thing to keep in mind are these other plays, do they have the short interest like GME? For instance, AMC tried to get a little squeeze of its own, but if you look under Yahoo Finance at the short percent of the float there is roughly 33%. It's very different than GME. Yes, that is a high percent short of the float, but still very, very different. So with that being said, we're not going to see as massive of a squeeze as we saw on GME because of that. It's very important to look at the short percent of the float before trading it, especially if you're trading these in sympathy to GME. But guys, understand this. This is very important. If you're trading these stocks, please be cautious and protect your account. No one's going to protect your account but you. Even if you're mad at the hedge funds, even if you're mad at the brokers, protect your account because you ultimately are the one in control of the button. Well, sometimes the brokers are. They're trying to be right now. A lot of the shorts got squeezed out with GME, and a lot of longs are now jumping into GME. And I'll tell you guys this, most people actually don't think GME is a good long-term investment. But the problem is most people are going to turn into long-term investors. So just make sure you're managing your risk well. If trading this, yes, it can keep higher. These stocks can be irrational longer than we can be solvent. That's the quote. It can go as high as it wants, essentially. No one knows the top, but we all know how the story ends. So just keep that in mind. Protect your account. Hope you learned something, guys. As this story keeps unraveling, let's keep each other up to date. Let us know in the comment section below what you're finding out, what brokers are restricting it, what else is going on, lawsuits going on with Robinhood and other brokers. I think Webull just restricted now as well from trading AMC and GME. So let us know, guys. Hope you learned something. We'll do it again next time.